let the bells ring and settle in here and bring in Kevin Green here, a look at the markets as we are kicking it off, not too far off from the unchanged line, waiting on Nvidia after the bell today. What are you watching? Good morning, Kevin Green.
Good morning, Nicole. Look, I think the first thing that we have to keep on the radar is going to be the news flow. We just actually saw, some reports coming out from Bloomberg that stated that Ukraine actually sent off around 10 Storm Shadow missiles. Those are the UK missiles over to Russia. So as soon as that actually happened, we saw equities kind of selling off. We saw bonds catching a little bit of a bid. Natural gas kind of moved to the upside. The dollar ripped to the upside as well. So this is a market that really wants to do without that geopolitical risk and really kind of focus on the Nvidia earnings as well as trying to regain a little bit of strength. But if you're looking at the levels for today, Nicole, the first one that I'm kind of looking at is 59.25. That could be your immediate area of resistance or where we might see a little bit of pressure here. We had a really nice day yesterday. We made a technical higher low based off this 5-day trend, if you will. And we actually had some strong buyers stepping in at the 58.50 level. I'm still keeping that one on the radar here, but we might see some pressure at 59.25. And if not, we might be able to also kind of fill that gap here from that Friday move to the downside, trying to test 59.50. But I think once again, kind of noting that the news flow is going to be really critical in order for us to try to dampen down volatility, try to re-strengthen this market, get in back into communication services, tech, try to get out of some of these defensive and have more of a risk on tone in the market.
Yeah, understood. So we'll watch some of those key levels and the resistance that you noted. There's a saying that sentiment improves when you see declines in gold, treasuries, and the dollar. You're actually watching 2 of the 3 of those here in your next chart. I'd like to hear more.
Yeah, looking at the correlation between the dollar and the 10-year yield, I think it's going to be very key. Now, actually, the dollar really does front run the 10-year yield, and we continue to see the dollar rise and really trying to break out. I mean, it did test around 107, I believe, yesterday overnight. And if that trend's going to continue, then yields could also maybe move a little bit higher. There's probably going to be a threshold, maybe at around 4.75%, Nicole, where the equity market starts to get a little bit more concerned about the yield market. What is it really pricing in? Is it pricing in potential tariffs? That's the notion that's going into the dollar. Is the yield market also pricing that in? Also, when it comes to Fed policy, are we actually going to be close to having no cuts or maybe only 1 or 2 cuts for next year? That's also being priced in. But any type of reversal when it comes to yields or the dollar at this point probably is going to be a tailwind for the equity markets up until a point. You don't want to see a rapid move to the downside for both of them, but you would like to see a gradual retracement of these gains that we've seen over the last week and a half, 2 weeks. But once again, the geopolitical risk really doesn't help. The uncertainty of the new administration and who are they appointing for certain cabinet positions really does not help. And the economic data has been, for the most part, fairly strong. So keep your eye out on this correlation. Once again, this is a 3-year weekly chart. We could see there is a little bit of a forward indicator when it comes to the dollar. I think that's going to be the one that we highlight here for today. And if we do see any type of reversal, maybe equities catch a bit off of that.
All right, Kevin Green, great to see you. Thank you for that. We appreciate it.